So here is what nobody tells you about the Fed and mortgage rates. So Fed chairman spoke today, great news, 90% chance of a Fed rate cut in September. The opportunity though is probably a lot sooner than you would think. So the Fed rate cut in September could happen, and there's also the possibility that rates could move higher after the Fed rate cut. And the main reason why that is because the market is already in moving and positioning ahead of that Fed rate cut in September. So by the time we get to September rate cut, that is already priced in. And anything that happens after that is anticipation of what's going to happen in the future. Now, between now and September, when the Fed meets, we have two inflation reports and we have an employment report. So a lot could change between now and then. Nothing is guaranteed. Fed chairman spoke that, but there is going to be if the market is expecting a rate cut, the Fed is going to cut rates because they do not want to surprise the rate cut if the market is expecting this cut. So everything points to a Fed rate cut in September, but it is very important that the opportunity is well before the rate cut. We have seen in the past three cycles when the Fed has lowered rates, markets actually responded in the near term and actually went higher. The move is well before. So the market today is positioning and pricing in. And one could argue that the move lower the last few months was pricing in exactly this rate cut. So how much more movement in rates will depend on the news and the data that comes out. So it's really important to keep in mind that you do not want to wait for the Fed meeting in September. The opportunity is now. Once September happens and the rate cut happens, there's a high likelihood that in the near term, right after, mortgage rates could potentially move a little bit higher. Now, long term, where we end up 6 months from now, a year from now, nobody knows. But we're at a point where we're almost, the 10-year Treasury is almost at 10, 11-month lows. So we're in a really good position from a mortgage rate standpoint. Inventory is at the highest point that it's been all year. It always peaks in July, August timeframe. That will start to tail off towards the end of the year. But as rates move lower, you're going to have more and more people re-enter the market. We've already seen application increase. We have, if you look at the data nationally and our data as a branch, new applications are higher than they were at this time last year. And if you remember this time last year, rates dipped to around the same point that we're at right now. So the opportunity is there. We're not going to get to 5%. How much, if we go below 6%, nobody knows, but the opportunity is here. And it's really important to understand that once the Fed rate cut happens, kind of all bets are off. And there's a good chance that mortgage rates could actually move higher after this Fed meeting.